evening, TheoTrade. This is TotalTheo, and you're watching the Theo Nightly video for April 25th, 2019. And we're still in the middle of earnings week, but we're going to take a look in this video on strong trending tech stocks, especially those that have been straight up for the bulk of 2019. And the main process here is to find stocks that are strong and then trade in the direction of the movement, expecting continuity. And the logic is stocks that are strong now tend to get stronger in the future. And we're going to see that logic play out for these stocks as we keep looking at earnings plays and keep managing any open positions. Starting with the S&P 500, we do have the big rally in 2019 that has taken up all of the decline. We look at the far right side of the chart to see our probability of expiring cone, and that just talks about any option positions we are putting on, managing, or thinking about taking in terms of selling premium outside the cone or playing within. We also look at two volatility measures in the charts, which include the average true range. That's helpful for day traders looking at what the expected plays are for an intraday trade. We know that lower volatility environments aren't the most favorable conditions for day traders, but can be for premium sellers or longer duration plays. We also know that low volatility environments do transition or turn into high volatility environments. We can see that both in average true range and of course in our more popular, more applicable measure of implied volatility. And the S&P, again, from a context standpoint, is just shy of that all-time 2018 high. The Nasdaq just above it. And that's the framework with which we are looking at these tech names. We'll start with two outliers, news-based stocks that have gapped and gone. This is an extreme example of the momentum, or stocks that are strong or fueled by news tend to get even stronger. These are not tradable opportunities, but just making a point of this concept. Two of those names include Qualcomm, which won a lawsuit against Apple and sent the stock surging from 55 per share, almost doubling, to at this point at least 90 per share. It is difficult to get a contrarian trade on because these things can go further, but of course it is just as difficult to get long into these type of environments. This is not what we are looking for in terms of buying pullbacks or joining the side of the bulls. The other stock that's going off the rails is Disney, and that's received a large upside gap, pushing away from this value area or chop zone rectangle at about 110 per share to 120, and that's taken it from the breakout level to 140. And again, on high implied volatility and average true range, not a candidate for trading opportunities. What are opportunities for us? We can look at tech stocks like Google, and these stocks are better trenders. This is what we would prefer to trade into. A stock that has a stable uptrend, stable trendline channel, stable rising daily moving averages. Our opportunities or trade setups come from buying the pullbacks, namely with in-out spreads or any type of call positions getting into the premium swings, or if you prefer to sell premium, selling premium as price touches or trades near these daily moving averages or rising trend lines. That's how we like to play these trades. We'd like to find that which is strong but getting stronger with high volume or rising volume, but not crazy up like Qualcomm and some other names there. So Google is one of the candidates, but we don't want to just rush up and get long. So if the purpose of tonight's video is to continue finding these strong candidates and then look for pullback opportunities so we can put these on watch list or just keep watching them individually. Next up is Cisco, and Cisco is a little bit more of a persistent trend than Google. Nevertheless, it still shows volume confirmation until recently, and these pullback plays have been where we are looking to put on positions or put on premium. So we are seeing a pullback now to the 55.75 level. Any type of breakdown there would trigger stop losses or a sell swing. That's where the fade traders or contrarian traders will live. And that's a breakdown beneath the 56 per share level. And that does open up an opportunity to sell short toward this lower 50-day moving average at about 54 per share. We don't take those positions until the markets break these support, because we can see 1, 2, 3, 4, maybe 5 examples of a successful defense and rally up away from the moving averages. That's where we get the trade ideas from, and the short-term swing trades, again, particularly with in-out spreads. And UTX, or United Technologies, is showing somewhat of a stable rising uptrend, but like the market at all-time highs, especially the Nasdaq at all-time highs, this is not a buying or a short selling opportunity. We are seeing an update today, and if you are looking to put these positions on outside of the video or use these as a foundation, go ahead and continue looking at implied volatility, additional levels, and of course the risk reward with your options. This video mainly is designed for tonight just to call these names out and get our attention on these persistent uptrending or stable uptrending tech names, especially as we get through this earnings week and push toward May. Intel sees a somewhat similar trade with a rising stable uptrend, rising stable trend lines, and rising stable daily moving averages. This is what we're looking for a pullback toward rising support levels, rising trend lines, or my favorite, the rising 20-day exponential moving average. And that's going to be about 56.50 per share. So Intel is coming into that potential buy zone. It's also a prior high and just a little price pivot. Next up is our favorite, or least favorite, depending on your perspective, and it just had a gap play. It's Microsoft. Microsoft reminds us why we don't like to trade short into these trending stocks, or don't like to trade counter to these trends. Sure, there may be a small window of opportunity, but the risk of this continuity, or the risk of the bulls reasserting themselves, especially on earnings gaps, that's a little bit too high for most traders to take. So Microsoft continues this stable, rising uptrend. It is neither a short nor a long, as it's so extended away from its daily moving average. But as we've seen from other stocks, Microsoft is probably not a great candidate because of that gap and potential go scenario. Again, we can look at this gap and go. We can see this in real time, but just think of what Qualcomm looked like in real time. How could this go any higher? But it did. And then, of course, just recently, Disney, which also gapped and traded higher. So risk is going to be high for both sides, and we do prefer stability. Again, compare Qualcomm and Disney with other stocks like Google or Cisco, UTX, Intel, Microsoft, and one more that we'll be seeing earnings. You'll see it live this evening. You'll know what the numbers are and be ready to trade or adjust positions for Friday's session. And that is Amazon. Amazon showed up in prior videos with a low ADX or a low volatility scan. You can see it happen here ultimately, and that did result in a breakout. So again, low volatility compressions do lead to future breakouts and trade opportunities. So Amazon gave us a breakout and a buy play or other pullback plays as we look forward to the earnings announcement tonight. That the Amazon expected move is roughly $75 up or down, and that gives a 70% implied volatility, and that puts it on the chart. If we freeze about this 1900 level, just shy of 2000, which may seem a far-fetched target, but it's not that far away at this point, or back down to about 1830, 1840, which is the daily moving average. So we'll be sure to take a look at Amazon tomorrow, but we'll keep watching these stable uptrending names and watching how they behave or managing any open positions as these trends continue. This is Corey Rosenblum with your Theo Nightly video for April 25th, 2019.